Hello, fellow traders. Imagine yourself at the heart of the market session, charts glowing, adrenaline rising as SoundHound comes into focus. Today isn't just about the single trade's outcome, but it's about the moments of decision that define your trading journey. We'll focus on SoundHound and unpack how anticipation, discipline, and the urge to chase losses can impact not only your P&L, but your long-term edge. The goal, shifting from reactive to resilient, transforming setbacks into actionable lessons. Let's look into the thick of it. I will present you the moment of a trade, not as a spectator, but as a trader making tough calls. Today, we're going to get into Chasing Losses is a Losing Trade by a Pajama Trader. Give this a like and subscribe. Let's get into it. The confidence setup. This trade starts with full conviction. Sound is powering up to 19 on strong volume, and you recognize the classic signals of a breakout. You enter a $20 call, your preparation guiding every step, risk defined, plan ready, and eyes set on the push through the resistance. This is trading done right. The opportunity meets process, but as the price approaches 24, the momentum stalls and the breakout fizzles. The market delivers a reversal at the very level you're watching, and true to your plan and real-time recognition of a failed momentum, you get shaken out closing the call. Rather than letting hope claim your discipline, you manage to exit decisively, preserving both capital and confidence. This is what separates hopeful traders from adaptable pros. You saw the setup, you took it, and more importantly, you respected the reaction when it failed. It's easy to feel regret at these moments, but honoring your exit is the real win, and you set yourself apart for success by not letting ego or hope overrule your stop. Rally and stalemate. From entry, SoundHound surges upward, validating your thesis as the price nears 24. The anticipation of a breakout is electric. Each move higher as it boasts your conviction. Then the pace falters. Instead of explosive continuation, you feel resistance harden. The breakout you envision turns into a wall, and the market's energy reverses. Now the challenge shifts. Can you pivot as the story changes? Your plan was solid, but every plan meets resistance. And great traders excel at reading what the market actually does, not just what they hoped it would do. As traders, investors, we need to look at the pivots or reversal signs. Missed exits, a series of choices.
I wanted to go over an example of a bad trade and continuing to stay in that bad trade, hoping for a different play or result. Got into this play right around 19, bought $20 calls, thinking that this thing was going to take off, only to have it spike up to 25. And then, I continued to hold it, spiked up again, held it, didn't get out of it, and it opened lower, didn't get out of it, stayed in it. And then ultimately it wound up spiking just a little bit higher, me thinking that it was going to continue to go higher, but what happened, it just continued to fade further down and continued to stay down, thus causing me to lose money on the position. So this is why it's not a good idea to stay in trades that you're losing. I should have gotten out when the spike failed here. Or I could have got out here, but I held. So knowing that into future trades helps me to understand why not to go into trades and stay in bad trades.
As SoundHound fails to clear 24, windows to exit emerge. First for a small win, then break even, then at a slight loss. With hype fading, each missed window makes the decision harder. The longer you hold, the louder that voice says, stay in a little longer, it might recover. By waiting too long, you risk turning a disciplined plan into a regretful lesson. In this case, correctly exiting as soon as the breakout fails saves you from this spiral. Here's where many traders crumble, paralyzed by what if. If you would wait to train your instincts to trust the first signal almost mechanically. The first action now means faster recovery and more power for the next setup. When hope replaces process. If you ignore these exit signals, hope starts to creep in as the process recedes. At this stage, trading turns from strategy to wishful thinking. Waiting for a price to retake 24, you wait longer than your plan allows. Anxiety grows as small losses turn into greater ones. Fortunately, this time you catch yourself, honor your risk control, and exit while losses are contained. Every trader faces the urge to just hold a little longer, but by the way you respond, to jump out before hope becomes your only strategy is the difference between surviving the trade another day or getting psychologically trapped. The cost beyond the numbers. If you hold too long, a modest intended risk swells into deep regret. The tangible cost is your capital. The hidden cost is your confidence, missed future trades, and the time it takes to reset. But by taking that exit, you keep the losses small, your routine intact, and your mind clear for the next valid opportunity. The best traders aren't those who never lose. They're ones who lose well. The process protects you from letting one bad trade leak into the rest of your week or month. Take the stop. Get back on the hunt, clear-headed. What chart trade review would change? With active chart trade review, decisive exits become muscle memory. Instead of agonizing about the failed breakout, you're freed up, ready for the next clear signal, with capital and confidence unscathed. The discipline to exit when your plan says to do so gives you the flexibility and longevity, not just on this trade, but over your entire career. Congratulate yourself with small wins and controlled losses. That's muscle memory that you're building, and what ultimately makes you a successful trader. Habits for avoiding loss-chasing trap. Consistent winners build process into habit, setting trade exits in advance, journaling their emotional and technical rationale, and always takes a breather after every tough decision. These actions mean you're never trading on tilt, but always acting with clarity and self-control. Each experience building your edge. This is what you should do after every trade, win or lose. Write it down, check it off, and make a review. Over time, these rituals become your armor and your greatest edge. The Sound AI Call. With the annotated sound chart is your coaching case study. A clear 19 entry, a strong attempt towards 24, a clear exit at the failed breakout, and the danger zone that you wisely avoided. The lesson is clear. Discipline and process create room for your next win, while hope and hesitation only leads to cycles of regret. Every clean exit is a new invitation to the market's next real opportunity. Review this kind of scenario. Lock in the reflex to act at your first signal, not the last. Over your trading investing career, this is muscle memory built at one trade at a time. It is what sets you apart from the crowd. Process beats hope every time. If you found value in this video, give it a like. Share this with other traders looking to level up their trading. And consider subscribing for more Market Edge videos. Thanks again for watching.